philsgang.com.
Banks,
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
When I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grande at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
As the new year approaches, make a resolution to challenge yourself to become the best investor you can be. Phil Grande can take your trading to a whole new level. Innovative stock market investing tools and the experience of over 50 years combined to give you the edge in controlling your financial future. As a Phil's Gang member, you're taught the essential strategies of investing using stock charts, training videos, and seminars. It's information Wall Street doesn't want you to know. Learn more at philsgang.com. philsgang.com. If you want to invest your money and grow your wealth, just listen to Phil Grande.
Hi, I'm Phil Grande at philsgang.com. There's many reasons to listen to a radio show, but I think to listen to my show, you get the truth. You get clarity, and you get great information.
No matter what level of investor you are, Phil's Gang strategies for investing are designed to put you on the path to success.
You know what? Most of all, it's fun. philsgang.com. Clarity, good information, and fun. Hi, I'm Phil Grande at philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially in the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
We haven't really seen tangible evidence that the economy is slowing.
Haven't seen tangible evidence the economy's slowing. My God, what's she looking at? I'm Phil Grande, Phil's Gang Radio Show Podcast. Welcome. It is March 14th. And it was interesting how yesterday Trump says to the Europeans, look, we're going to raise your tariffs 200% on the booze you send over here. Now, what does that mean? It means that all this tariff talk is really disturbing this market. And you got to put in perspective. Nothing has been put in place. Example, this week, we're up. The Dow was up 670. And then, it's down 670. The next day up 485. Next day down 427. Up to 222. Next day down 478. Here, let's take the spiders. They're down 71. Next day up 64. Down 104. Up 31. Down 43. Up 27. Getting a headache. Are you kidding me? What are you, nuts? This is insane. NASDAQ with PE ratios. Just the PE ratios of NASDAQ is insane. And here you had your down 65 points. Next day up 257. Next day down 438. Next day up 128. What is going on? Well, you got two things happening. You got Trump, who's playing this game with tariffs, which is good. That's fine. Okay. But you got to understand, you also have Powell. He's doing the opposite. In other words, Trump is doing QE. He's trying to get yields down. He wants those yields down because as I said before, when he was his goal, when he took over, he has a $7 trillion nut he's got to pay. He's got to pay that $7 trillion this year, 2025. He's got to pay that. He doesn't want to pay it with 4%, 5% yields. He wants to pay it with 2 or 3% yields. So he's doing everything he can to drive the treasuries, to drive these yields down. And so that is called quantitative easing. You know how they did that. They print all kinds of money. That's very inflationary. And then they go out and they buy the treasuries. And that's really cash. and that's the cash that's going to be available for the banks for consumers to go in and borrow. So we got all this, so this is what's going on right now. He keeps on trying to get these yields down. Then you got Powell, who's doing the opposite. He's doing QT, tightening, because we destroyed the value of our dollar. And when you destroy the value of your dollar, you destroy the U.S. dollar, you destroy the value of all the currencies around the world, and they're selling their bonds off. They're selling their bonds off. So we got quite a deal going here. So I said the other day, I said, okay, we are now going to have a rally. I said, within a couple of days, we're going to have a rally. And I got my members set up for what they call a short covering rally. That was right. And we're in the middle of a rally. Now, what's going on with this rally? Well, on one end, you got a terrible situation where Trump, if he's really into this Department of Government efficiency, remember what he's facing here. There's something else going on he's facing. Other than facing that note that he has to pay, and he hopes to get the yields down enough so he can pay a low rate. But he also has this real problem with there's 11, think about this, there's almost 7.2 million FHA loans. And out of that 7.8 million FHA loans, there's 1 million of them that are in default. But after COVID stopped in 2020, Biden decided to extend, 23, I'm sorry, in 2000, COVID started 2020 and ended in May of 2023, May or March. And so what happened was, as COVID ended, he didn't want people to hand their keys in. There was an election going on. So think about it. You got these million homes in foreclosure, and if they all just walked out of their homes, don't even take the million. Take 400,000 of the million homes that are in default. Just 400,000. Let's say they took it out of the moratorium program and foreclosed on them. The inventory in this country of housing would go up 40%. 40%. That's like 3 times worse than it was back in 2008 to 2010. That's unbelievable what's going to happen. So I could understand what he did. He said, well, let's keep extending the moratorium even though there is no COVID. And so from when COVID ended in, I think it was May or March or what was it, May or March? But anyways, I think it was May of 2023. Check it, May of 2023. When it ended, he says, hey, you folks that are in default, don't worry about it. What we're going to do is this. We're going to take your payments, and we're going to continue to put a moratorium on it. Yeah, May 5th, 2023. So May 5th, 2023, it's ended now. May 5th, 2023. Okay, so he says to the million people, don't worry about it. We're going to extend the moratorium and pretend like the COVID was still on. Wait a minute. We're now in 2025. So now he says, not only am I going to let you not pay your payments, you got that moratorium, how about if I do this? I'll make a deal with you so that you don't go and walk out of your house or let them foreclose on you. I'll make a deal. Not only stay in your house, you don't have to pay your payments, but I'm going to discount your payments by 25%. Can you imagine? Now, wait a minute. The real debt of these banks, the real debt of these banks are $750 billion. Let me explain. Let me see if I can find the right cut here. That just blew my mind today when I heard this guy on CNBC talking about what good shape the banks are in. Let's see if I can get this.
The banking system, seems to be in good shape.
Like that's Powell, right? Now there's one more. He's talking about the banking system here.
Financials.
Financials?
Yep.
Ugly.
Yeah, it has been ugly, but we see very high quality. Capital levels are still really strong at a lot of these regional banks.
Wait a minute. Capital levels strong at these banks? They're broke. And just a lie. Capital levels. Remember, if you take, never mind the small regional banks, take the 5 biggest banks. If you take all of their losses, now I'm talking about their losses on treasuries. You remember what happened to Silicon Valley Bank, right? They lost $100 billion. They went and bought $100 billion worth of treasuries at zero interest. They thought, boy, this is great. When they finally come due, we're going to make a fortune. We bought these at zero interest rates. When they expire, we're going to make a fortune. Well, guess what? It didn't happen because all of a sudden inflation was there. They started to raise rates. And they lost $100 billion. But the funny thing about it, when they were reporting their quarters, they would come out and say, hey, we're reporting our quarter. What a gangbuster quarter we had. We made $100 million in this quarter. Wow. But they knew they were losing money. But they didn't have to disclose it because it's what they call an unrealized loss. So banks, if they have bad, let's say they got $20 million in bad treasuries. They got $20 million in bad mortgages. They got $20 million in write-offs, okay? People didn't pay their loan. So let's just say they got $100 million in an aggregate of write-offs. And the bank made $50 million that month. So they really lost money, right? But no, they report it as, oh, look at this, we did really well. They don't count those losses until they sell them. Wouldn't you like to do that with your business? So that's why we're getting these terrible numbers from these banks. In fact, here's what I said about 3 weeks ago about the big banks, right before they rolled over. And we were long, we were buying them. As far as the market right now, if you watch the banks, remember, I know everybody talks tech, but the bank stocks are really, really important. And the bank stocks are ready to roll over. And I had everybody short because my color-coded chart went from green, okay, to yellow, give us a warning, because that tells us the money is coming out, and it did, and the banks started to drop, and we have some beautiful shorts going on. Everybody else got caught. They're holding on the banks because on January 15th, remember, the 5 biggest banks came out and reported, look at the money we're making. They came out and said, like Citibank, we made $90 billion. Bank of America, we made $100 billion. Goldman Sachs, $200 billion. No! They were losing $758 billion when you put the aggregate together of all their losses. They don't have to report it. So then this other woman comes out and tells us how great the economy is. She doesn't understand why we're going to go into a recession or why we're going to go into recession. That's what she was talking about. Because she thought, boy, the economy is really doing well. But wait a minute. Doing well. Let me see if I can find that cut for you.
Recession fear-mongering, I think, is what's being listed as a catalyst for this. But why do we have a recession all of a sudden?
Never mind a recession, you idiot. We have, what are you, nuts? We have stagflation, not a recession. Think about what's going on, right? Let's take first of all, the Atlanta Fed came out. And they said the fourth quarter, 2024, GDP was 2.3%. Then they came out for the first quarter of 2025. She doesn't see this? They came out with 1.5%. So we got the banks lying about how much money they're making. Thank God we shorted. Thank God we have our Pro 2 where it turned red for us to show us money was coming out. And then, so you got this woman in there lying. These people all come on TV and lie. And think about it. The first quarter, we're going to go from 2.3% GDP growth to 1.5% GDP growth. Are you nuts? The BLS, the unemployment claims, rose to the highest level in 3 months due to wages not keeping up with inflation. Consumer confidence fell the most in 3.5 years. Retail sales dropped the most in 2 years. What are you, nuts? Retail spending fell at the fastest pace since early 2021. Walmart forecast for earnings going forward, the word they described as dismal. Vanguard announces the unemployment rate for 2025 to increase from 4.2 to 4.5. Now, going back to Trump and what he's doing and trying to get these yields down so he can pay that debt, the government right now is borrowing like crazy. And it's crowding everybody out. In other words, when you look at a number where it says our GDP is going down, right? She says it's going up, right? She sees nothing wrong. But we were told the GDP is going to drop from 2.3% from the fourth quarter to the first quarter, where to 1.5%. Now, why is it going to drop? Because the government keeps spending. Like in 2023, $2 trillion more than they took in income. 2024, $2 trillion more than they took in income. Now remember, the government doesn't manufacture anything, doesn't produce anything, doesn't sell anything, but they spend $2 trillion every year more than they take in. So how do they get the money to spend? They steal it. It's called taxation. They steal from us. And when they don't steal from us, they go and borrow. And when they go in and borrow, it destroys the small Main Street businesses, especially the startup businesses. It's called crowding out. So my whole point of this discussion is this rally we're having now, this is nothing more than a short covering rally. We're making money on it. We're participating in it. And then she's going to come right back down and make new lows. Don't screw up and think, oh, I'm going to buy NVIDIA, I'm going to buy Tesla, it's on sale now. You will get screwed, believe me. We'll talk about that and a lot more when we get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. You know, I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang podcast radio show. You know, you can join my gang for 10 days. It's free. And remember, 85% of the people in the stock market lose money. You know why they lose money? Because they only buy stocks. They only buy. They're scared to death to short. The worst thing that ever happened was 401ks. They're terrible. Because you're not allowed, when the stock market's going down, you're not allowed to short. You just got to sit there and lose money. Talking about that, the other thing is that, the other thing about that is the crowding out. Now, nobody knows what that means. Most people don't know what it means. But government is always borrowing. They do not. They steal from us. They take our money. And I'm going to go over some stocks in a minute. But first, they steal from us. They have no way to make income. They do not produce. They do not. They're a bunch of bums. They do nothing. These guys, I can't believe these guys on the Hill. They're up there, the Democrats, going crazy. Well, you see this, they're going to cut all the people in Social Security. The people in Social Security aren't going to get their checks. You see, they're going to cut all the people with the veterans. They're not going to get their benefits. That's a lie. They're going to get them faster. You can tell these morons, I don't know how they get into Congress. Honest to God, I don't know how they get into Congress. I look at some of these people. Ever see that one there with blue hair? One's got blue hair. And then you got that idiot Waters. Ever see her? She's a moron. I mean, unbelievable. I mean, the people they have in this Congress, I can't believe, when I was a little kid, I saw people in Congress. Wow, I looked up to them. These people got to be really, how do you get there? You got to probably go to Harvard. And these people are stupid. So here's what they do. We got people running our government saying, we're going to spend more than we take in. And then we'll steal from the hardworking people. Because remember, the only people who are doing well are the top 10%. People make $250,000 a year or more. They're doing 80% of the spending. They got all the money. The people, all the other people are going from paycheck to paycheck, and they're going into debt. And here's why: because the government, they don't produce anything. So when they spend $2 trillion a year more than they take in, what do? They go borrow money. Well, wait a minute. When they go to borrow money, what do? They sell treasuries, right? That's how you borrow money. And of course, interest rates go up. Yields go up. Interest rates go up, right? And so what happens is when interest rates start going up, and now all of a sudden you own a little business on Main Street. Let's say you own a little restaurant. You got 30 seats. Your business is great. You want to double it. You got it. You want to do the construction. You need $200,000, and you go in and you thought, well, the rate was 5%. You go in now and you go and say, okay, I need $200,000, and you say, what's the rate? I was here last month. It was 5%. Oh, it's now 7%. 7%? I can't make it on 7%. How did it get to 7%? It's called crowding out. What the government does when they keep on borrowing, they keep on selling treasuries, it crowds, the interest rates go up because of them, because they produce nothing. So they keep borrowing, yields go up, and that means the small startup business, he can't start a business. Interest rates keep going up. The people want to add on and hire another 25 people. He's not going to add on because interest rates are going up. But they don't run the government like a business. And when you got these people in there complaining about Department of Government Efficiency, what are you, nuts? That's insane. And by the way, what people don't realize too is we got to keep a strong dollar. We need a strong dollar. We haven't had a strong dollar or strong economy since 2022. Because, remember, we import almost everything. But we don't have a strong dollar. We have a weak dollar. I mean, yeah, I don't know how he's going to get out of this, Trump. I mean, yeah, he's talking tariffs, but there's no final tariff. There's no deal with anybody. There's nothing solid yet. So this volatility, up one day, down, up day, one day, down, up, down. It's good for us because volatility, we make money because, again, we have a chart that makes sense, right? It shows us when money's going in and money's going out. But we have more failed policies. So I'm just thinking here for a moment. Let's go take a look at what happened. I told my members, I said, let's go in, and we were short. Remember, we were short. We first were long all the banks. We did beautiful with J.P. Morgan. We started to buy J.P. Morgan. I told my members to get into J.P. Morgan when it was green on my color-coded chart. It was a buy signal. We did beautiful. I think we made about 16%, something like that, return. And then all of a sudden it started to turn yellow, telling us money's coming out, and then it started to turn red. And we started to short it early while everybody else was still buying the banks. Well, the reason why everybody was buying the banks because they were being lied to every quarter. That's why they report the banks first. Ever notice earnings season, they report the banks first? First thing you report, banks. Why? Because they don't have to report their losses. That's right, until they sell them. So finally, I had everybody short the banks. And as the banks were going down, we were making money. Then everybody else, okay, and then before that, remember how everybody was buying a dip, buy all the tech stocks, buying a dip. And I had my members, every time my color-coded chart turned red, we sold short. So I said to them about 4 days ago, I said, we're going to have a short covering rally. Because normally, I've been doing this for 50 years, and normally when you see, when it goes down 5, 10, 15, 20, every one of those increments, they take profits. The big guys, the big institutions take profits. It's called profit taking. It's not a rally. You can't have a rally. How the hell are you going to have a rally? Who's buying stocks at these PE ratios? Are you out of your mind? Who the hell is going to, well, anybody with a brain is not going to be buying stocks at these PE ratios. So I knew that the market was going to roll over from my experience, and then with my chart going from green to yellow to red, it was perfect. So you got all these people in there, and they were wrong, and now they started to lose money in all the tech stocks. Remember, they were buying on a dip. Okay, so all these stocks now, like the Mag 7. Now, I had my members sell the Mags starting, I think it was around, I said, let's sell them short. I'm going to be pretty close. I think it was around $54. $55, right around there, just when it turned red, $55. And we took a lot of our profits, around $45. So that was about a 12%? Yeah, 12%. Nice 12%. But don't forget, we made on the mags on the way up. We got in around $48. And then we got out right around, I think we got out around $55. And that was about 15%, am I right? Yeah, 14.5. So we made 14.5 going up. Now, how did we know to buy it? Because our chart, unlike your chart shows, right, the candlestick red one night, then the next night green, red, green, or green and green, then red or red. Because all it tells you is if they closed on the high of the day or they closed on the low of the day. 25 years ago, I said, this is stupid. If you're a day trader, that's fine. But what about people like me? I'm a position trader. I hold on to stocks anywhere from 10 days, to 6 months. I said, why can't someone design a chart that when there's more money going in than out, why does it turn green? And when it's going to go, and when money is starting to be taken out, why doesn't it show up yellow to warn us? And then it'll turn red to sell short. 25 years ago. Over 250,000 people later using this chart. They love it because it guides you. It tells you. It's pricing. That's all you care about is pricing. Not all. Who cares about the fundamentals? If you're still buying stocks on fundamentals, what are you, nuts? Are you nuts? Who's going to buy on fundamentals? Nobody cares about fundamentals anymore because since technology Nobody cares about trailing PE, forward PE, price to sales, price to book, return on assets, return on equity, profit margins, free cash flow. I remember when I was a kid, before computers, I had to sit there and take all the numbers from my father, and I had to draw a chart, hand draw it before I went out on a Friday night. He wouldn't let me go until I got it all done. I mean, but that was a great training. But that doesn't mean anything anymore. You got to just follow the money. And so I designed my chart to do that. So it's something you should try. Subscribe to it for 10 days. It's free anyways. So I was right. I said, here's what's going to happen. The market, when it pulls back about 10%, and now we're down about 10% in the S&P, we're down about 13% in the Dow. I said, what's going to happen? All the big boys and people like us, professionals who shorted, we made a ton of money shorting. Now we're going to buy these stocks back, but it's only a short covering rally. Don't think that, oh, this is over now. The market's going to go, get me in, I got to get in. So I had everybody buy. I said, why don't you just buy the spiders? Just buy the spiders. Or why don't you buy just the banks, XLF? Just buy an ETF. Buy an ETF. But the best ETF, I think, to buy, I said, is XLK. Or buy Merck. Okay? I mean, MAGs. Buy MAGs, the whole Magnificent Seven. So we're going to have this rally. And she's going to, let me see if I can show you what's going to happen. If I can get this for you on the S&P. We've had on this rally on the S&P, let me pop it up here for you. Okay, so here's the rally. Let me stretch it out. Okay, so see we're back here. This was in May, right back here. Okay, May. So you got. And this was August. This is key. Mark my word down, August is key. If we break August, we're dead. So right now we got a low that we established in April. We went up, pulled back. We had a low we established in July. July or August, I think it was August. Yeah, August 1st. Rallied again, right? And then we had the rally again. Now we got another pullback. So let's see. So these pullbacks have been about 8 to 10%. Then they rally back up. So you could tell the system's in place. They're knocking these stocks down. Trump's trying to push these stocks down, because of what he's doing with that note, that $7 trillion note. And so what's going to happen is this. All you got to do is when they run this market back up, like let's take the SPY. The low on the S&P was somewhere around, I think, 549. Today, it's 561. Okay. So all you got to do is watch. On the way up, let's say it even goes to 600. All you got to do is measure. Is there more buyers on the way up than sellers on the way down? If the answer is there's more sellers on the way down in the S&P than buyers on the way up, the Qs, if there's more sellers on the way down than buyers on the way up, now my chart will show you that because it'll turn red, then what's going to happen is we are going to drop again. This is just profit taking. The other thing you know is that there's no movement in the stochastics, what we call a crossover. So please don't take this rally as, oh, this is great, okay? The crash is over. No, it's not. Crashes take time. When a crash is when you have finally, you reach the top, you reach the peak, and at the peak, you finally get the 200-day moving average crossing above the 50-day moving average. Normally, it's the other way. But when you have a stock market that's rallied, like this market's rallied over 800%, okay, since 2009, when you finally peak, and when the 200-day crosses the 50, then that's when you know it's locked in for a crash. We haven't got that yet. Join my gang, Phil's Gang, philsgang.com, free for 10 days. We'll help you out.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's site at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to